So, good evening to all of you. Today we are going to discuss a new type of mutual fund, that is funds of funds. So, and I also welcome to all of you on my channel, that is Amrit Commerce Lecture Series. So, this channel basically deals with the various concepts and concepts regarding related to the commerce subject. So now in this channel we are discussing the range of issues, and basically the channel deals with finance and banking. So today we are going to discuss a new topic, that is funds of funds. So basically, what is funds of funds? So funds of funds is nothing but a mutual fund that is a mutual fund that goes and invests in the schemes that are offered by other mutual funds. So it is a bit different. This type of mutual fund is a bit different. Generally we see that a mutual fund pools the money from the small investors and invests in various physical and financial assets, but this type of mutual fund does not do so. It does what? It collects the money and it invests in the schemes that are offered by other mutual funds, not by investing in stocks, debentures or bonds, or any real estate or gold, but it goes and invests in schemes that are offered by other mutual funds. So other mutual funds which are offered by AMC. So here the portfolio of this fund comprises of mutual fund units which are offered by other mutual fund units of other mutual fund schemes. So here the mutual fund schemes, the portfolio comprises of mutual fund units which is offered just like conventional mutual funds. Here the portfolio comprises of mutual fund schemes offered by other mutual funds, just like conventional mutual funds. So this type of mutual fund, the composition of the portfolio includes equity, debt, money market instruments and other financial assets. So the fund of funds, the benefit of investing in funds of funds is that here it is an excellent medium or maximum tool to get the benefit of this diversification, because we are investing in other mutual fund schemes that are offered by other mutual funds. So it does what? It minimizes the risk and helps in getting reap the benefit of. So the investor can reap the benefit of this diversification, diversification and capital appreciation. So another benefit of investing in funds of funds is that the investor can start with a very meager amount of investment. However, this expenses, the small amount is these funds provide diversification, and small amounts are allocated in different mutual fund schemes. But the main problem with these funds of funds is that the expenses are quite high. There are various expenses related to the mutual fund schemes, or some mutual fund schemes provide charges commission, or have to pay other charges, so that have to be borne by the investor, so it are quite high. So each mutual fund scheme has a different investment strategy, and the risk with different and each investment strategy has different level of risk which are to be borne. So here the allocation pattern and the performance of each mutual fund is different, and though the two different mutual funds have started on the same date, but the allocation and performance of the mutual fund schemes may be different, and both schemes may give different returns. So an investor has to make sure that the returns and the performance of the mutual fund is according to its objectives, and it's meeting the risk tolerance and the personal risk tolerance, and it is meeting whatever the investor is having the personal objectives. It is able to meet him. So a person may have um, an investment objective to get a person may have an objective to purchase a car by investing in funds of fund. So the so the investor may time to time must see whether whether the fund's performance or fund returns are adequate enough to meet his dream or goal. So another problem with mutual fund of fund mutual fund scheme is that it doesn't guarantee of return, and sometimes it may erode the principal as well. So by just by merely investing in funds of funds, the investor must not be complacent that it will give guaranteed return. No mutual fund, in other words, we can say that no mutual fund gives guaranteed return. So some amount of risk is always there. So a investor may time to time should check the objectives that when how the fund is performing. Um, investor must check whether the NAV must check that the net asset value and the per unit value on a daily basis to track whether the fund is performing well or not, how the fund is performing, and whether the objectives of the particular investor is met or not. So no mutual fund scheme should invest in other no fund of fund scheme should invest in a fund of fund scheme offered by another mutual fund. So it must not. The SEBI prohibits a mutual fund to invest a fund of fund scheme investing in other fund of fund scheme. So there are certain restrictions with regard to the fund of fund scheme. The first one is that a fund of fund scheme should not invest in other fund of fund scheme. That is the first limitation. So a fund of fund scheme should not invest in any other assets other than the schemes that are offered by other than the schemes offered by the mutual fund. So a fund of fund scheme should invest only in the schemes that are offered by other mutual funds. So when it is prohibited to invest in other physical or financial assets like stock, bond, debentures, and real estate, etc. But some amount should be invested to meet out the redemption or to meet out the liquidity requirements. Some amount to be invested in cash or other liquid assets so that they can quickly meet for if a investor wants to redeem its units so that it can meet his obligation. So to do that, some amount of in money should be invested in cash or other liquid assets. So and it must be also disclosed in the offer document on the fund of fund scheme. So whenever the new fund is launched, new fund offer is made, the fund of fund scheme should in the offer document itself it should mention how much proportion is going to invest in liquid assets to maintain the redemption or liquidity requirements. So in India, the first mutual fund of fund was launched by Franklin Templeton Mutual Fund on October 17, 2003. So this is the Franklin Templeton is the first mutual fund which launched the fund of fund scheme. So funds of fund may be of different type. Means there are very variants of fund of fund schemes or fund of fund may there are very different types of funds of fund schemes which is available in India. For example, size specific. For it may from if you take the size according to the market capitalization, it can invest in large cap, mid cap, and small cap. So size specific, we can take the example of mid cap fund of fund. Industry specific. So if a fund of fund is investing in particular industry, example real estate fund of funds. Theme specific. So it may be equity or debt. So according to the theme, objective specific, example life stages. So if a person is in the early stages of his life, or he is adult, or he has just into his job, so according to his life stages, or a person who is going to retire after some period of time, so according to his depending on the life stage, on which stage of life he is being. So fund of funds may design its scheme according to its objective, or it may There are different styles of investment. Some investors are very aggressive. They do not dare to take risk, but some investors are there who are very cautious and do not want to take much risk, and also they are very fearful of losing their capital. So on the style specific, it may be aggressive or cautious with a funds of fund scheme. So with this, I come to an end. So thank you very much for watching this video. Hope you have liked it, and if you have any query, you can drop it in the comment section, and also do subscribe my channel and do hit the like button if you are satisfied with my video, because your like with each like, it gives me an inspiration to come up with new and innovative content. Thank you very much.